This is Nightly Business Report with Tyler Matheson and Sue Herrera.
New milestone. The Dow touches 23,000 for the first time ever, just days ahead of the 30th anniversary of Black Monday.
Short-term fix. Senators reach a, get this, bipartisan deal to stabilize the health exchanges, and it has the support of that man, the president.
Security hole. If you use Wi-Fi, and most everybody does, there are ways to protect yourself from the latest security scare. Those stories and more tonight on Nightly Business Report for Tuesday, October 17th.
Good evening, everyone, and welcome. It happened, even if just for a brief moment. The most well-known stock index in the world broke 23,000 for the first time ever. And it didn't take long for the Dow to cross that milestone. In early August, the Dow first closed above 22,000. And the index got a lift today from United Healthcare, which reported stronger than expected profit. More on that in a moment. First, though, let's give you the cheerful numbers. The Dow Jones Industrial Average gained 40 points. It ended just below 23,000. NASDAQ fell ever so slightly. The S&P 500 rose and was up nearly 2 points. Bob Pisani takes a look at this major market milestone.
Another day, another big milestone for the Dow. The index broke above the 23,000 mark on an intraday basis for the first time ever, though just shy of a closing high above 23,000. So Boeing and Caterpillar and Goldman Sachs, Home Depot, those were the four companies most responsible for the majority of those gains since the Dow hit 22,000. Now, you might think we've been seeing a lot of these Dow 1,000 birthdays in the last year or so, and if you think that you're not hallucinating, we are. It's partly because it's an easier, shallower climb to get to the next plateau the higher we go. But over the last 18 months, the Dow's gone from 18,000 to 23,000. That's a gain of 5,000 points in 18 months. It took the Dow 7 months to go from 18,000 to 19,000, but only 2 months to get from 19 to 20, and even less than 2 months to get from 20 to 21,000. This time around, it's taken a little over 2 months to get from 22 to 23,000. So there's been three distinct phases of this broad 5,000 point rally. First was the earnings recovery. Earnings growth had been negative from 2015 and into 2016, the period we characterized as an earnings recession. Well, then we turned positive in the second half of 2016, and earnings took off and the stock market took off. Second, after the election came the Trump rally. That's the second part of this, with the belief that lower taxes and higher infrastructure spending would boost earnings down the road. Finally, we're in this third phase. We call this the growth trade, the reflation trade. That's happening right now, characterized by an expanding global economy, higher rates, a hope for a steeper yield curve, and tax cuts. Now that we've hit 23,000, how about the roadblocks? What could stop us from getting to the Dow 24,000? There's several things. Number one, a reversal in the record earnings. Not likely right now. Or more aggressive Federal Reserve. That's possible. We could have global growth slow down, possibly. And finally, a failure to get tax cuts done. All four of those are potential roadblocks for the market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Kate Warren joins us now to talk more about what happened in the market today and what she sees ahead for stocks. She's principal investment strategist at Edward Jones. Welcome, Kate. Nice to have you here.
Thank you. Glad to be here.
You know, how do you view the market at these lofty levels? That big 23,000 is a big round number for a big index. But overall, does the market look fairly valued, overvalued? Are you finding pockets of opportunity?
Well, there's certainly pockets of opportunity, and I think overall, certainly stocks are a little bit expensive. They're not as inexpensive as they used to be. But I don't think that's something investors should be overall worried about, because when you look at history, what you see is stocks continue to rise, especially after they hit big milestones like a round number like the Dow just did. They just tend to do it with a little bit more volatility, and that's what we think investors need to prepare for.
The last few years have been very good to equity investors. How should I set my expectations now for the next 3 to 5 years?
Well, if you look at the last 5 years, U.S. stocks have returned an average about 14% per year. That's well above historical averages. And usually after a period of above average returns, you should expect slightly below average returns. So we're expecting 5 to 6% per year going forward. That's still better than bonds, than cash, but it's not as good as what we've had recently, and that's what we think investors need to prepare for.
Does the Fed matter at all in your equation, Kate? Because there's a lot of speculation that they finally will pull the trigger in December, and we also have the president saying he's going to make a decision on whoever the new Fed chief will be, or whether he's going to keep the current Fed chief in place in early November. Do those events matter to you?
We do think the Federal Reserve matters, and certainly the chair matters, although I think a little less right now than you might think. And the reason is, with the economy improving and with solid economic growth, I think that whoever is Fed chairman is likely to continue this slow, steady pace of short-term interest rate increases. And does that matter for investors? Yes, in two ways. I think the first is that investors know that the Fed is moving slowly and steadily. That's actually good news for stocks because they're not likely to be surprises. That could change, but we don't see that changing. The second thing is, as interest rates rise, it gets a little more expensive to borrow. Over time, that could be something that does become a problem, but right now we don't see that happening anytime soon. The third thing is, if inflation rises unexpectedly, that is a risk.
Right.
And then the Fed might have to increase rates more quickly. That would probably be one of the biggest risks we see right now. But we also don't see any signs of higher inflation. That's been a puzzle. So no price increases, no rate increases that are unexpected right now.
Kate, thank you. We have to leave it there. Thank you for joining us. Kate Warren with Edward Jones.
IBM could potentially help lift the Dow tomorrow as well after reporting better than expected earnings and revenue late today. Those results aided by the company's shift to cloud and security services, and that sent shares higher in initial after-hours trading, despite IBM turning in its 22nd quarter of consecutive revenue declines. Josh Lipton now with more on IBM's results.
IBM CEO Ginni Rometty has worked hard to try and redefine the company, emphasizing new business lines. The company calls these markets strategic imperatives and includes artificial intelligence, analytics, cybersecurity, and the cloud. This quarter, revenue from that division came in at $8.8 billion, a jump of 11%. RBC's Amit Daryanani says that's important because as next-generation business lines grow, they could offset the slowdown in IBM's traditional business lines. For Nightly Business Report, I'm Josh Lipton, San Francisco.
As we mentioned a bit earlier in the program, United Healthcare helped lift the market today after reporting better than expected results. Its shares rose more than 5%, and it was one of the 3 blue-chip Dow members to post quarterly results. The others were Johnson & Johnson and Goldman Sachs, and the results were mixed. United Health Group reported net profit of more than $2.5 billion. That's more than expected, and UNH raised guidance through next year. Its revenue up almost 9% to more than $50 billion. Might have been up even more, but UNH says withdrawing from the Affordable Care Act markets took away $1.6 billion in sales. Still, its insurance revenues are growing, as are revenues in its Optum Medical Services Group. Optum is the biggest healthcare IT provider.
The prescription drug prices are out of control. The drug prices have gone through the roof.
President Trump's latest comments on drug prices have the caution lights flashing for some drug makers. But Johnson & Johnson, whose biggest business is prescription drugs, wants you to remember the other side of that story.
The overall cost of health care is a topic we should be talking about, but drug prices represent only 14% of overall health care costs. And what's lost in the discussion is the immense benefit that they provide to patients, and they actually reduce or help reduce the other 86% of the cost that we're not talking about.
J&J said prescription drug sales were up 15% in the third quarter to more than $9 billion. It posted top and bottom line beats, and J&J is raising its 2017 earnings guidance for the third quarter in a row. Goldman Sachs also reported better than expected earnings, though its fixed income, currency, and commodity trading sales dropped 26%. That drop, however, was not as bad as many analysts feared. Some of its other businesses are faring better. Equity returns remain up around 10% for the year, and Goldman says its investing and lending business has doubled so far this year. And in a separate J&J story, the company scored a legal victory. A Missouri appeals court today tossed out a $72 million jury verdict which claimed its talc products caused ovarian cancer. The court found that the case should not have been tried in St. Louis. The decision follows a Supreme Court ruling limiting out-of-state plaintiffs, and it endangers other Missouri verdicts against J&J, as well as hundreds of actions filed against the company.
Two leading lawmakers have struck a short-term deal to stabilize the Affordable Care Act healthcare exchanges. The deal between Republican Senator Lamar Alexander and Democrat Senator Patty Murray comes days after President Trump decided to halt payments to insurers that help make coverage more affordable for low-income enrollees. The agreement would reinstate those federal subsidies for 2 years and provide states with more flexibility to make changes to health care mandates. President Trump has signaled support for the measure.
Lamar has been working very, very hard with the Democratic, his colleagues on the other side, and Patty Murray is one of them in particular. And they're coming up, and they're fairly close to a short-term solution. The solution will be for about a year or 2 years. It is a short-term solution so that we don't have this very dangerous little period.
John Harwood is following the story from Washington. John, I am a little perplexed. There's a lot that perplexes me about Washington these days. But why would the president? Why would the president go along with restoring these subsidies that he described, I believe, as recently as yesterday, as nothing short of payoffs to insurers?
Well, perhaps because they're not payoffs to insurers. They're subsidies that make low-income people, including a lot of people who voted for Donald Trump, makes them able to afford their out-of-pocket costs under Obamacare. It's part of what makes the system work. And even as the president was making those statements publicly, privately, he was encouraging Lamar Alexander in a phone call over the weekend to proceed with those negotiations. So I think the president sometimes uses strong words as tactics in negotiations. And I think that's the way to look at his statements then. The question now is whether other Republicans, especially in the House, are going to go along with this and then be able to move on to tax reform, or whether they're going to extend this argument about Obamacare with no prospect of a better result than they've gotten so far.
What does your gut tell you, John? I mean, where does it go from here, do you think?
I have to think that the fact that Lamar Alexander and Patty Murray came out with this deal, Lamar Alexander is a very experienced and credentialed Republican, and Mitch McConnell, having pulled the plug on those negotiations while the Senate tried one more time in September, allowed them to go ahead. And that the president then came out and praised it today, I think that is a sign that it is likely in the end that this deal, or something very close to this deal, is going to become law. But there's no assurance of that whatsoever. And we've seen the Republicans struggle with whether they want to govern or whether they want to sustain arguments that they've been making for a very long time. This is their moment to govern.
All right, John Harwood in Washington tonight. Thank you.
A federal judge in Hawaii issued an order blocking major parts of the president's newest travel ban. The court suggesting it violated immigration law. The decision effectively stops the administration's travel restrictions before they were scheduled to take effect tomorrow. The Justice Department plans to appeal that ruling.
The latest round of NAFTA talks have ended in stalemate. Canada and Mexico have rejected what they view as hardline U.S. proposals to renegotiate the North American free trade deal. But the ministers from all three nations have agreed to extend talks into next year to work out some of the challenges.
Parties have now put forward substantially all initial text proposals. New proposals have created challenges, and ministers discuss the significant conceptual gaps among the parties. Ministers have called upon all negotiators to explore creative ways to bridge these gaps.
Some sticking points include auto manufacturing and how long a new deal should last.
Congressman Tom Marino has withdrawn his name from consideration as America's drug czar. The president tweeted, "Rep. Tom Marino has informed me that he is withdrawing his name from consideration as drug czar. Tom is a fine man and a great congressman," end quote. The decision comes after a joint report by the Washington Post and 60 Minutes found that legislation sponsored by the Congressman Marino hindered the Drug Enforcement Administration in its fight against the opioid crisis.
Still ahead, how much is too much when it comes to spending on original content? What's hotter than Netflix? Well, now Netflix is planning to spend big money on original content over the next year. The company says it will now spend between $7 and $8 billion on programming in 2018. That raises questions about rising content costs. Michael Olson is senior research analyst at Piper Jaffray, and he joins us now. You know, nobody quarrels with Netflix's ability to attract new subscribers or collect lots of money, but I guess some people raised eyebrows when they saw that $8 billion price tag on what the company plans to spend on content. Is it too much?
Well, it's a huge number, but at the same time, it's necessary in order for the company to continue to differentiate its content from other services that are out there and have a competitive offering that keeps subscribers interested and engaged. They're going to need to continue to spend more on content, and more of that will be on original content over time. This year, it's about 25% of their spend on original content, but over the next few years, we expect that to trend closer to 50%.
Does subscriber growth then have to match or outpace the costs that they're spending for content?
Absolutely. That's how we look at it, is that today subscriber growth is outpacing the growth of the content spend. And if you think about it, as long as that continues to happen, that puts Netflix in a good place for long-term margin improvement. And we expect that'll continue to be the case. And in fact, over time, we expect that subscriber growth will increasingly outpace the cost of content growth.
Where is the stock today, and where do you see it going?
Well, we think that there's a huge opportunity for international. In particular, if you look today, about 50% of internet households in the U.S. have Netflix subscriptions. And if you look at international, it's actually less than 10%. So there's a huge opportunity for international growth of Netflix. We think over time that can drive significant profitability improvements. And ultimately, we have a 12-month price target of $240 for Netflix.
You know, when I looked at the chart that we just put up, I mean, it has been a phenomenal performer on Wall Street. Do you find anyone in the universe that is close to them in terms of competition in original content? Or are they really pretty much a case in and of themselves?
Well, from a competitive standpoint, it's fairly limited. If you think about the offerings that are out there today, the closest are probably Amazon Prime Video, which comes free with the Prime subscription. And they're spending a significant amount on content as well, in the multiple billions of dollars per year. And then the next closest would probably be Hulu after that. And they're also spending quite a bit as well for their subscription service, as well as an advertising service. So there are competitors, but no one that has matched what Netflix has done today.
All right, Michael, I'm going to go home and watch some Netflix. Michael Olson with Piper Jaffray and Company. Thanks a lot.
Thank you.
Morgan Stanley's results top expectations. That's where we begin tonight's market focus. The financial services firm credited the growth to the wealth management business, which offset a drop in its sales and fixed income trading business. Morgan Stanley shares rose a fraction to $49.12. Harley-Davidson reported lower than expected quarterly retail sales as demand for motorcycles in the U.S. continues to decline. And the motorcycle maker said it expects the weakness in the industry to continue. Nonetheless, shares of Harley rose 2% to $47.52. Railroad operator CSX reported a rise in its quarterly net profit thanks to an increase in coal and consumer goods shipments, as well as higher freight rates. But the company's revenue took a hit as it suffered from service delays in the quarter as it works to overhaul its operations. Shares of CSX rose more than 2.5% to $54.32.
The industrial supply company W.W. Grainger reported earnings that beat estimates. Grainger said growth was driven by strategic pricing initiatives as well as its digital marketing activities. Shares jumped more than 12% on the day to $205.42. And Omnicom's quarterly earnings topped estimates despite a drop in revenue from last year. The communications company said its advertising and specialty communications businesses increased, while its public relations arm declined. Omnicom shares up better than 2% to $75.59.
We told you yesterday about a Wi-Fi vulnerability that affects nearly every modern protected network. In other words, just about everyone. The security hole is called crack, and there are things that you can do right now to make sure that you are protected. Andrea Day has details.
It's called crack, really a gaping hole in the Wi-Fi system, or the WPA2. ArcSend security expert Rusty Carter.
WPA2 is a protocol that Wi-Fi uses to authenticate and secure communications between the device and the router.
It's usually secure, but he says with this flaw, an attacker within physical range of the Wi-Fi network could trick connected devices and steal information, even install malware.
It could be their username and password. It could be medical information that they're sending via email. All of your information, all of your personal information passes through your networks today.
And almost every device is vulnerable, from your phone to computer, anything connected to Wi-Fi.
The top targets would be hotel Wi-Fi, public Wi-Fi, hotspots in airports and coffee shops.
The flaw was discovered by a security researcher, and there's no evidence now that it's been exploited. The good news? Major tech vendors are aware of crack and have or will soon have patches to fix it. Microsoft tells us, quote, "We delivered security updates on October 10th to protect our customers as soon as possible." Apple will release an update to its operating system in the coming weeks that will include a patch. But for now, Apple's beta operating systems do the trick.
The Android devices are much more vulnerable to the attack.
According to the researcher who discovered the flaw, the way Android devices connect to Wi-Fi makes them more at risk. Android's maker, Google, tells us, quote, "We're aware of the issue, and we will be patching any affected devices in the coming weeks." And Carter says the best step you can take is to always keep your systems up to date. Anytime there's a new update, make sure you install it right away. And as always, try not to conduct personal business on public Wi-Fi. For Nightly Business Report, I'm Andrea Day.
Coming up, off the field drama, NFL owners and players seek common ground on a divisive issue, one that's also hitting and hurting the brand. Here's a look at what to watch tomorrow. The Dow Component American Express will report earnings. The Fed will release its Beige Book survey on U.S. economic conditions. China's president will make a speech opening the Party Congress. And that is what to watch Wednesday.
One Wall Street firm is warning that lower ratings for NFL games will hurt CBS's earnings. Credit Suisse cut its third quarter estimates for the company, citing a 17% decline in ratings during the first several weeks of the football season. The call comes as NFL owners and players meet to discuss the anthem controversy and some other issues. Eric Chemi is outside the meeting for us in New York tonight. So, Eric, what happened specifically at the meeting today?
So, Sue, this is their annual fall meetings. They meet every year, but this year it's not normal because there are a lot of issues affecting the league. Like you said, the anthem protests, they're hurting ratings, ticket sales, merchandise sales, and the big broadcasters, looks like their earnings in the next quarter are going to hurt. So they've got to get business back on track, players and owners coming together to figure out, are they going to let the anthem protest derail what should actually be a football season, not a political agenda? That's the main focus of the meetings today.
Did they make progress today? What do we know, number one? And number two, how are the ratings declines affecting companies, sponsors, broadcasters, et cetera?
So in terms of specific progress, they didn't actually say there's a new rule that says players have to stand. But what happened is players and owners met, and they came to some, let's call it an agreement that we want to work together on social issues, equality issues, and move forward in that. They're going to keep having those discussions. They said there was a watershed moment to bring players and owners together. But as far as the businesses go, like you said, CBS and Fox, they really rely on NFL ratings because of their broadcast business. Turning that around is going to be a different story because a lot of people have already said, I don't want to watch as long as players are kneeling. So that's a bigger question. They didn't have an answer for that today.
Yeah. Well, what else can we expect as the meeting continues?
So it's a two-day meeting. They meet today. They'll meet again tomorrow, and they'll just work through a lot of these issues. Part of them are the anthem. Part of it is just regular league business, as you know, not stuff we would talk about on NBR, but regular NFL business. Another thing that needs to get done, Roger Goodell, the commissioner, he's negotiating a 5-year extension on his contract. So obviously he wants a lot of this drama to go away so that he can get back on track with his own personal career.
Eric, thank you so much. Eric Chemi in New York.
You got it.
And finally tonight, the 400 richest people in America, and they're richer than ever. The minimum net worth to make the Forbes 400 list is now a record $2 billion. I'm not there. Topping the list for the 24th consecutive year is Bill Gates, worth $89 billion. Jeff Bezos, number 2, net worth of $81.5 billion. And rounding up the top 3 is Warren Buffett, who prior to last year had held the second spot for 15 straight years. The biggest gainer, Facebook's Mark Zuckerberg, ranked 4th. President Trump saw his fortune fall by $600 million to about $3 billion, likely due to a tough New York real estate market. He came in at number 248 on the list.
And before we go, here's a look at how the stock market finished the day, a day that saw the Dow briefly break the 23,000 mark. The Dow gained 40 points to close at 22,997. NASDAQ fell fractionally, and the S&P 500 was up nearly 2. And that'll do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody. We will see you back here tomorrow night.